Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Max Cabasso, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch in the Nasdaq-100 as we take a look at technical levels. Max, it's great to have you with us. Welcome to Trade Talks. And really, we see stocks moving higher here. Some uncertainty removed with Jerome Powell's comments, really telegraphing what's happening with rate hikes.
Yeah, I mean, he was pretty open with what they were going to do. It wasn't so much telegraph as he straight up essentially said he's in favor of 125 basis point hike in 2 weeks. Market had been pricing in potentially two, up until about a week ago. Now it's obviously firmly priced into one. So I think a bit of that overhang has started to come off. Obviously some of the tech names that were looking at some margin compression, that was a bit of an issue. But obviously now that that's kind of taken off, obviously it's green shoots, at least so far today.
Let's take a look at your chart that we have over here with fresh technical levels to watch on the Nasdaq-100, because really, ever since February 24th, when we had geopolitics really inserted into the narrative, we've seen 1, 2, 3, 4% moves in one session, round tripping. Yeah,
it's been pretty shocking, the 1-2% moves on almost a daily basis. I think what we're watching now, we've kind of been in this bearish trend channel. On the NDX, we're looking really at the 14,250 level, which is kind of where we bumped into today before we kind of to stall out and move back lower. We're still near the highs, but that's our first level we're watching. Then that 14,500 level is the next stop. Above that would be 15. I think there's obviously that potential, to really see a big short-term move. To the downside, there's really not as much support. 14,000 is the level we're watching. And the talks we've been having, people are watching is, if the Ukraine war, Russia war gets kind of settled, does the focus then turn back onto the inflation, trade at home, and does the Fed rate, hike start going back up to and speed back up? 10-year break evens are back at 2.75%, which is the highest level we've seen since November, and before that, it's been almost a decade. So, the inflation pressures are only climbing, so that's obviously going to weigh on some of the tech stocks. So, short term, it looks like we have potentially some room to the upside, but there's definitely levels overhead that we're going to be tough to get through.
Yeah, it's interesting that you bring up inflation, because we just spoke with Phil McIntosh, our chief economist, and the issue is, obviously, oil is a big factor when we take a look at inflation data. And the more that this is prolonged, the more challenging it's going to be for not only the Fed, but global central banks to devise a policy. Economies are running hot. We're seeing it in the U.S. data, that's for sure. Then you have inflation, and it's going to be, they don't have as many tools in the tool chest because we are coming from such a historically low level with rates, so that their hands are kind of tied.
Absolutely, we've been kind of letting the market run, or the economy run hot, for a while. We've been sitting basically at 0% interest rates. With oil, obviously geopolitics plays a big factor, but also one of the other factors, and we've been talking about on our desk is wheat, the wheat market. Also with inflation. Russia controls is about 26% of the world export of wheat. They're the largest exporter in the world of wheat. So obviously that gets played into it as well. So food costs, it's not just the cost of the pump. It's also putting food on your table. That cost is going to go up as well. So it's not really just that one pivot point where they can say, okay, let's try to tap other sources. There's a lot of different factors that all play into it. So there's definitely a lot of inflation pressure, and again, that's why that 10-year break even continues to climb, because expectations are that it's really going to be an issue that the Fed's going to have to get on top of without without stepping on the market too much.
Right, and you know what? Ukraine is a big exporter of ags as well. So that's just going to exacerbate the situation. But you've been a trader for a number of years. I think the velocity in the moves that we've seen is really what stands out. So Max, April 20th, 4/20, 2020 was when oil was trading below $0. People were paying to get contracts taken off their hands. Now we're looking at well over 100. I mean, this is 23 months to see a move like that, or even just when you look at rates. It's not typical to see the velocity of the moves that we've seen. But I mean, think about oil. That's crazy in less than 2 years.
Absolutely. Up at 110 WTI, Brent's 113, 115. Every day it's kind of, okay, is this going to be it? Is this it? Are we kind of front running this? Is everything priced in? And then it just keeps going, keeps going, keeps going. There's obviously everybody's going to get to 150. There's a lot of speculation, but that market is running hot right now. And I think that's going to be an issue. And again, like you said, the velocity, the 2-year Treasury yields. If you look at the yields, 2-year, 10-year has flattened out a bit. you know, it was about 20 basis points over the month between the 2 and the 10. You see the 2-year yields really climbing. So the velocity it's been, you know, pretty astounding.
All right, we'll keep you guys busy on the desk. Max, thanks for joining
Sure.
us on Trade
Thanks,
Talks,
Jill.
and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.